Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Friday, October 31st, 2014. We're looking at today's economic calendar. You can see there were several events that were scheduled today. Most of them happened prior to the open of the U.S. trading session. At 7:30, we had the release of core personal consumption expenditure price index data, which came out in line with expectations at 0.1%. Then we had employment cost index data coming out, which was slightly higher at 0.7% versus a forecast of 0.6%. Then we had personal spending data come out, which was much lower than expected at a negative 0.2% versus a forecasted increase of 0.2 of a point. Then at 7:30, we also had personal income data being released, which was slightly lower at 0.2% versus a forecast of 0.3%. Then about 15 minutes after the markets open up, we had the release of the Chicago PMI data at 8:45, and that was nicely higher at a value of 66.2 versus an estimate of 60.2. And then at 8:55, we had the revised University of Michigan Consumer Sentiment Report come out, and it was also higher than expected with a value of 86.9 versus an estimate of 86.4. Now, as far as today's pre-market sentiment was concerned, things were fairly positive coming into the open. The Asian markets had closed higher on the announcement of a new Japanese stimulus plan. Investors in Asia were surprised after the Bank of Japan decided to expand its money base to help keep inflation near the 2% level. We saw that the best performing market in Asia was the Japanese Nikkei as it closed up 4.9% at its highest level in nearly 7 years as the weaker yen was helping to drive shares of export companies. We also saw that the Shanghai market closed up 1.2% on a new government consumption program that helped the market reach 8-month highs. As far as the European markets are concerned, they were open and trending higher after yesterday's strong U.S. growth data. Now, the shares were trading sharply higher after the U.S. economy grew faster than expected last quarter. Sentiment was further bolstered by a number of regional banks that beat their earnings forecasts, and consumer prices rose 0.4% on an annual basis in October over the 0.3% level that was noted in September. As far as the United States is concerned, Wall Street did figure to open up higher on yesterday's gains. Now, the futures indexes were pointing sharply up following the global markets higher on yesterday's upbeat U.S. GDP data and on the new stimulus program introduced by the Bank of Japan. We do see that it was also a busy week for earnings reports as 143 of the S&P 500 companies all reported this week, and today's focus would be on Chevron and ExxonMobil. The focus for many U.S. investors today would be on the Chicago PMI report, which was scheduled for 8:45, and on the revised University of Michigan Consumer Sentiment Report at 8:55, along with third quarter earnings results. As far as my trading activity was concerned today, folks, I attempted 5 entries and was filled on one of those in the E-mini Dow market. But before we look at these trades in any detail, I do need to remind everyone of this following important disclaimer, and that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the Euro FX futures market, and we can see about halfway through the trading session today, we did see a scalping opportunity to go short. You can see I saw 1, 2, 3 bars moving lower, followed by 1 bar retracing, and I was hoping that this second bar was going to retrace and give me a 2-bar pullback entry here at 125.18, just below the upper Bollinger Band, but the market never really came close to my entry, and I had to pull this trade out of the market. The next market that caught my attention was the E-mini Dow market, and in this market we saw 4 attempts to trade. Right here at the open of the U.S. trading session, you can see we had 1, 2, 3, 4 bars moving higher, followed by 1 bar retracing and a second bar retracing, and this gave me a long entry opportunity at 172.82. I was risking 8 ticks to make 8 ticks on this trade, and what happened here is I got my fill. The market moved 5 ticks in my direction. When that happened, my stop loss automatically automatically moved to break even, and then the market fell back against me and knocked me out for a scratch trade before moving totally against me. So I'm glad that I had my trade management in place here. Otherwise, this would have cost me 8 ticks on this particular trade. Now, staying with the E-mini Dow, you can see that we had 2 bars moving lower, followed by 1 bar retracing and a second bar retracing, and I was looking to get a short entry here at 172.78, just below the upper Bollinger Band, and the market came within a couple of ticks of my fill and then fell away, so I had to take this trade out of the market. Then you can see we had 2 bars moving higher, followed by 1 bar retracing, and I was hoping the second bar was going to retrace to give me a 2-bar pullback entry at 17,247, just above the lower Bollinger Band, but the market never really came close to my entry, and I had to pull that trade off. Staying with the E-mini Dow, 2 bars moving lower, followed by 1 bar retracing and a second bar retracing. And on this trade, I was hoping the market would come back to my entry at 17,277, just below the upper Bollinger Band. It came within a couple of ticks of filling me, then moved through what would have been my profit target. And when that happened, I had to take that trade off. So at the end of the trading session here, folks, I had 5 attempts in the market, and I had this one fill, which is a scratch trade, and I advised folks that I was going to come back after lunch and take a look at the markets to see if there might be something else to trade. Well, there was an opportunity that I saw, but this time it was in the gold market, and it was right after noon when I saw this opportunity. I had just come back to my computer, and I saw that gold prices were moving higher here, and then at the next bar, you can see we had a green bar here, which means that the MACD is in a bullish condition. The Bollinger Band pointing sharply up, leading prices. Lower Bollinger Bands were flaring down. So I entered here with a trend following trade, looking to get 30 ticks worth of profit against 20 ticks worth of stop loss. And what happened on this trade was that I got my fill, and when the market moved 15 ticks in my direction, I moved my stop loss up to break even plus 5 ticks. And then I trailed the market at this point in time by 10 ticks. So as the market moved up here to 71.51, my trailing stop was here at 170.5. Then the market came back here, knocked me out for an 8-tick win, which put me up $80 per contract traded. But I'm a little disappointed that it did that retracement, because you can see on the very next bar, it shot right up through what would have been my profit target, which would have given me $300 on this trade. Nonetheless, this is the way I've got my program set up. When the market moves 15 ticks in my direction, in gold, I moved to break even plus 5 ticks and trail the market by 10 ticks, and this ended up knocking me out at this point in time with an 8-tick win. So just to summarize, when it was all said and done, I ended up with 6 trades today. I had 2 fills, 1 scratch trade in YM, and an 80-tick winner in gold, and very much looking forward to the weekend and what kind of trading opportunities might present themselves next week. We're looking at next week's economic calendar. You can see that we have a very busy week indeed. Things kick off on Monday with the final manufacturing PMI and ISM manufacturing PMI data being released. Then we have FOMC member Fisher speaking, and during the day we're going to have the release of North American vehicle sales from the major manufacturers of automobiles in North America. Then on Tuesday we have trade balance and factory order data coming out. Wednesday really heats up. We have the ADP non-farm employment change coming out, which is the private sector job data. We have FOMC member Kocherlakota speaking, FOMC member Lacker speaking. We have the final services PMI and the ISM non-manufacturing PMI, FOMC member Rosengren speaking, and crude oil inventories. Then on Thursday, we have the all-day Euro group meetings out of Brussels. We have the European Central Bank press conference, unemployment claims, preliminary non-farm productivity, preliminary unit labor costs, natural gas storage, and FOMC member Powell speaking. And then next Friday is the first Friday of the new month, which means that we have the key employment information coming out. But things get started with the ECOFIN meetings out of Brussels. This is a meeting of all the European finance ministers. Then we have the non-farm employment change, the official U.S. unemployment rate, average hourly earnings, and consumer credit. So as you can see here, folks, we have key events lined up for each and every one of the trading days next week. So hopefully that's going to give us some nice volatility and movement for us to work with. So with that, I want to thank you all for watching today's daily video. video. I wish you a pleasant evening and a wonderful weekend. I look forward to speaking to you on Monday. Take care and good night.